Think Realty Nation, what's up? It's Abhi Golhar. Welcome to the Think Realty podcast. Excited to be here today because we're talking about multifamily. My guest today is an investor, but he understands multifamily. He has a storied history. He understands all of everything, and I can't wait to kind of pick his brain about multifamily. There are a lot of us that are trying to make that leap from single family to multifamily, from wholesaling to multifamily, which is kind of surprising sometimes. But hey, you know what? It's okay. We're all allowed to make the leap. It's okay. You know what? Not a big deal. But his deal volume, stellar. His bio is pretty awesome. So here's his background. I'm just going to read it kind of verbatim because it's too cool for school. Or too school for cool. I don't know. Danny is an author, entrepreneur, and host of Real Estate Mastermind, a national speaker and volunteer with the First Tee. He has over a half a decade of professional experience working as a financial consultant. He's advised multi-billion-dollar companies and helped them achieve results in areas that included improved revenue performance, profit margin, and an enhanced technology utilization. All right, so first of all, he has to have a red cape and be called Superman. Okay, I think that is the prerequisite for having this kind of bio. Today, Danny is a full-time real estate entrepreneur and investor. His company, PassiveInvesting.com, purchases B-class value-add apartment communities that are greater than 150 units. So I'm excited, again, to have that conversation. After we finish up with Danny, we'll talk about I just lost my scroll here. Here we go. We'll talk about where the new class of investors are buying single-family rentals. So if you're still in the single-family space, you'll find out where the new class of investors are buying single-family rentals. And if you're looking at jumping over to the multifamily space, then you know what? Let's learn from a guy that owns over $250 million worth of it. So let's get started. We can't do this podcast without our sponsors, so a huge shout-out to Narada Real Estate Investments, Marco Santarelli. I love you, man. Narada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateInvestments.com. All right, the $225 million man, Danny. Let's bring him on. Danny, welcome to the show.
I'm grateful to be here and add some value to the listeners today.
You got it. So I went over your bio a little bit. I know I'm sure I missed many, many things. Give us a little quick 1-2 punch. Who are you and what do you do?
Yeah, today I'm a full-time real estate entrepreneur and investor, and our group, PassiveInvesting.com, invests in B-class value-add multifamily deals. Think about 150 units and larger, and think about us. But prior to that, I was just like everyone else who was out there working hard to get started. I got started in the corporate world working a traditional kind of 9-to-5 job and said, this is not the lifestyle that I want to have. My consulting job took me around the world and around the country on a weekly basis. And that was not the type of lifestyle that my wife and I at the time wanted to have. And so we decided to make a change and took a stance. We sold everything we owned and had in California and San Francisco and relocated to Charleston, South Carolina to start building a real estate portfolio. One fun fact about me is actually my first investment property was a $1 million commercial office building. And so what I was looking at it from a goal perspective of what is the purpose of my investment and how is it going to benefit in the purposes that I want it to benefit, versus some people who kind of just get started in buying single families because that's the easier or lower barrier to entry. I said, well, what's my goal? And let me work backwards and find an asset that fits that need. And so fast forward several years, now we're doing this full time, and I'm just so grateful and blessed to be a full-time entrepreneur and investor and buying multifamily deals. I would say to, all of the listeners out there who are thinking about real estate and thinking realty, go bigger versus going smaller. And it's just a different change in mindset, but you absolutely can do it. And you just need to surround yourself with like-minded individuals who can not only expand your thinking, but also help you get there.
I love that. That's super, super cool. Let's talk about market selection in making that leap. there are a couple of barriers to entry. The first of which is properly assessing a market and jumping into that market to gain a foothold, to gain a strong foundational understanding of what's going on, why it's happening, and I'm sure there are a lot of factors that you look at. How does one select a market for multifamily?
Well, what I always tell investors and people who are asking me how can they get started or they can't find deals in their area, the first thing is, real estate opportunities exist everywhere. You just need to figure out what you want, again, that goal or that purpose to serve. And so for us, when we look at multifamily markets specifically, we want to have a place where there's very good economic indicators. And we're going to look at just talk about two of the biggest ones on the show today. But number one being population growth. So, are there more people moving in? The reason that that's a good economic indicator is because that's going to give you a good rental base to fill your multifamily communities. The second component is there job growth in the community? Because what that then means is these people who are going to be your prospective residents living in your community paying rent each month, do they have a job, do they have income to pay those bills? And so those two economic indicators, population growth and job growth, are the biggest factors that we look for in the markets that we invest in. And we are very strict in our criteria. And from any fellow investor out there, if you are bogged down and overwhelmed and you hear yourself saying there's not any good deals out there, I'm going to challenge you that your criteria is not strict enough. So for us, we look at about 7 or 8 markets around the country, specifically just in the Southeast US. So if a broker calls me and they've got a hot lead on a great deal in Oklahoma, I'm going to say thank you, but no thank you. I'm not even going to look at it. I'm not going to spend my time on it because we're so focused in our criteria. It gives us the ability to be experts in those 7 or 8 markets. And I'm not trying to be an expert of the entire US economy or every multifamily market around the country, but I know my 7 to 8 pretty darn well.
So once you've identified a market, and I appreciate you sharing that because there are a couple of obviously, I mean, there are many factors that you look at when jumping into a city or even a submarket of that city. But once you've identified that city and you've identified a property, you start building these relationships with brokers, et cetera. What have you found to be the best way to do that? To like build a team in that area? And even if you're a pro multifamily investor, it can be still kind of tough when you're jumping into a region of the United States, as you mentioned, the Southeast, and then say picking Miami or picking Fort Lauderdale or picking Atlanta. How do you build that team quickly, efficiently, and know that they're really, really good?
Well, you can definitely use some data to figure that out. And let's just talk hypothetically. If we were
Sure.
going into a brand new market where we didn't have any broker relationships, for us, when we look at a market, in order for us to buy a deal, we need to be looking at a bunch of them, right? So we can kind of funnel them down to eventually get that one that we're going to buy. And then we can buy the second one. But broker relationships is one of the most important things to deal flow. So, in order to get deal flow, you need to work those broker relationships. So, for us, again, we would kind of work backwards. We would use data and we would look at our CoStar access and the CoStar database to say who are the most active. Give me the top 10 brokers of multifamily assets, again, that fit our criteria of a B class built between 1990 and 2010, plus or minus maybe 5 years, 150 units or more, and somewhere that's going to trade above $30 million. So who are those most active brokers? And I'm going to start to have conversations with them and work those relationships in order to build that rapport with that broker to just get our name into the mix get us into some of those best and final rounds competing for deals to hopefully be awarded one.
So when it comes to finding these brokers, I understand the co-star piece. I think that's really smart. You're reverse engineering the process because a lot of folks will say, well, geez, I'm just going to go to the golf course and get dressed up, hit a couple of rounds, and I'll maybe meet brokers there. What other ways do you find brokers, and how do you continue to establish those relationships?
One of the best ways, and it might be self-explanatory, but the best way is to close one deal
Yeah.
and build off of that experience. So most people out there, you're not going to go out and buy from owning zero multifamily deals. You're not going to go out and buy a 500 unit deal, most likely. So you're going to kind of build up, but getting started with a smaller deal is the most important thing that you can do. Having that experience, having that resume, it's going to allow you to use that reputation that you've closed a deal, that you know what you're doing, you have experience in the space. Brokers are going to start to take you seriously. And so, what we would try to do, again, I would either use a previous relationship from another broker or a lender or a property manager who is friends with or knows the broker in that new market we're going after, because I want a warm introduction. You know, having that warm introduction where the broker in the new market knows I'm a serious multifamily buyer, that's going to be an easy entry point versus if you call them up out of nowhere, hey, I'm Danny Randazzo. I buy multifamily apartments. They're going to say, great, let me put you on my list. I'll send you some stuff. But if
Right.
if you can say, hey, I've bought these deals, I'm looking to expand into this area. By the way, we have a friend in common. Here's our person. You have that nice warm referral.
I like the warm referral. I think that's like a really, really smart idea. And this also works on like a social selling strategy too, especially on LinkedIn. Right? Now that you and I are having a conversation, let's say we're doing this podcast. Now all of a sudden I'm going to send this off to my list. You're going to send this off to your list. And things can really start to unravel really well. And now we're marketing to each other's lists, et cetera. The brokers, the world of brokers works the exact same way. Once you refer it in, it's like oh, what is that airport security thing? It's not pre-check, but it's like
Clear.
clear. Thank you. Right? It's you do the fingerprint scanner, and then you're led to the front of the line, and you just show them the mobile boarding pass. You don't even need an ID, and you're straight through. It's the exact same way. I think that's awesome. You
Yeah.
go for it.
I was going to say, I really like the airport analogy, right? Because you have like
Yeah.
the regular lane, and then you have the
Yes.
priority lane of the frequent travelers, and then you've got this other clear lane. And it's like, how do you get yourself out of the general population line
Yes.
into the upgraded line, into the upgraded special line?
Exactly. Right. And then, yeah, exactly. I absolutely love it. How do you underwrite your deals? And maybe one or two more questions for you, and then we'll finish this up. Underwriting your deals is really important. So you've identified the market, you've identified the broker relationships, and now they're sending you deals. How do you know unequivocally that this deal is a good one? Is there some spreadsheet that you use? Is this like another like hush hush industry secret where there's the spreadsheet that's passed around that everybody uses that's just like totally top notch? How do you do that?
Um, I don't believe the industry is hush hush. My partners and I have put on multiple webinar series, hours in length, about the details and how we do our underwriting. So people are welcome to go to dannyrandazzo.com. In my blog, those videos are there for you. So you can get all sorts of free content and learning that underwriting process. But for us, I would say it's really two parts to qualify it. Number one, we have to do our physical due diligence at the asset. So is it structurally sound? Is it in a good location? How does it feel being on that property? Do you get the warm and fuzzy that this is a great location? There's a buzz to the community. Or do you go there and it's kind of off the beaten path. It's on the wrong side of the street. It's just on the opposite side of the good traffic light. It doesn't feel right. So for us, there's a big component to that physical condition of the property, the location of it. And, it varies between submarkets, even, streets and roads. So that's a really important piece for us. It has to have that feel, that buzz about being a great place to live. And then number two, yes, it's all about the numbers. Underwriting deals it is the most important thing when qualifying an opportunity, because there's a ton of people out there who will say there's no good deals out there. I can't get any of my numbers to work. And my guess is you're probably underwriting incorrectly. People either are ultra conservative and there's things that they're underwriting to from a conservative standpoint that really will never happen. And then other people are way too aggressive in their underwriting, thinking that their asset is going to get the highest rent in the entire market, which is never a good underwriting strategy to have. So for us, we like to come in right in that middle, that conservative standpoint, and you get that experience by doing many, many deals along the way. So with that, a couple of points on being conservative in your underwriting. Like I said, never be the market leader in terms of rent that you're going to push to if you're doing a value add deal. We really like to come in kind of third or fourth position in terms of pricing based on comparable assets to the property that we're going to acquire, based on the value add renovations that we're going to do. And then the second piece about being conservative, I would say, is just ensure that your financing terms are conservative. Ideally, you should be able to beat your financing terms at underwriting. So if you're going to be very aggressive and think you're going to get a 3.5 interest rate on a permanent 30-year fixed debt option right now, not likely, just in the condition of the market. Maybe you're going to come in at 3.8 or somewhere around there based on treasury and based on spreads. But again, be conservative. You need to know where your numbers are at. And then also the last piece, conservative in your future year projections. So are you doing a 2 to 3% rent bump, as well as, maybe a 2% expense increase year over year? So be conservative, be logical, and then always use your property manager to help vet those numbers. Use your lender to help vet and review those numbers, because multiple eyeballs are going to be better than just one, especially if it's your first deal or first few deals.
Gold. I love it. That's awesome. I could listen to that over and over and over and over and over and over, right? Like, that is really actionable intel. And if you want to learn more, obviously, go to www.dannyrandazzo.com. That's RANDAZZO.com. You can also check him out at passiveinvesting.com if you have an interest in investing in multifamily deals. And you also can buy his book. And Danny, is that book available on Amazon? The Boy Who Lost His Wallet? Okay.
Yep.
Awesome. So I'm going to order that book today. That's going to be great. And you and I should talk after the show. There's a whole lot of opportunity that we can potentially have fun with. So thanks so much. I certainly appreciate the time. I've learned a lot. I know our viewers and listeners have learned a lot as well. And you said that is the best way to get in touch with you. Do you have an email address, phone number, anything else, or just the two websites and maybe LinkedIn?
Website's a great place to start.
Awesome. Sounds good. Danny, thanks so much for your time. I appreciate it.
Thank you.
You got it. All right, Think Realty Nation. This next segment is brought to you by Real Property Management, which is the largest residential property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions throughout the country. Learn more. Go to www.realpropertymgt.com or call 888-806-7088. I want to take just a second and kind of talk about the new class of investors buying single-family rentals and where they're buying single-family rentals. And listen, you want to go big, play in the multifamily space. If you're not ready for that yet, and you're like, well, geez, I'm going to get there, but I'm going to get there on my own pace, then cool. Single-family rentals, another really good option. And my really good friend from Renter's Warehouse, Noel Christopher, wrote an article for Forbes and said, the title was "Where's the New Class of Investors Buying Single-Family Rentals?" And here are a couple cities. Charleston, South Carolina, where Danny lives right now. This is kind of interesting. Number 2, Columbus, Ohio. 3, Tempe, Arizona. Number 4, Evanston, Illinois. We got 2 Georgia cities in here, Decatur and Alpharetta, Georgia. You got Boise, Idaho, Jacksonville, Florida. And what I love about this specific article is he says, quote, "I like to focus on areas that are just outside larger metro areas, and they're called ring communities. They have embraced the hipsterbia model, and they offer great jobs, affordable housing, and a sense of community that is lacking in the middle of nowhere, tract housing, suburb, and exurb areas." And I thought that was really interesting. So if you are in a major metro area, look for ring communities, or a ring community, ring city, ring community, and start driving to find this opportunity, especially in the single-family space, if that's where you want to start. You have any questions? You want to get in touch? Super easy to do it. Go to thinkrealty.com. You can find me anywhere online at Abhi Golhar. And this podcast was brought to you by, if I can find them, here we go, by Narada Real Estate Investments. And my friends over at Narada, great job, guys. Narada Real Estate Investments is your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. If you have any questions about single family, multifamily, where to get started, how to find the right property manager, how do you raise the right kind of capital, you can, of course, get in touch with Danny. Feel free to get in touch with me or anybody on the Think Realty team by visiting www.thinkrealty.com. All right, that's the show, Think Realty Nation. Thanks so much, and until next time, happy investing.